Yeah, it's going to be a kind of a wild ride, I think. And uh, interesting to see the market action today, though, because it seems like for all there is to worry about, the markets rallied, record run S&P. It seemed like it was sort of bullish across the board. Bonds were closed for the holiday in the U.S. today. So, let's figure this out. First of all, let's start out and talk to me about what you're seeing chart wise. And we are so happy to see everybody in the chat. Thankfully, technology came together for us, Dale.
Hi, everybody.
Thank you for your patience, everybody. So I asked if we could start with the NASDAQ 100 because not only do we have gains, but look like tech was storming higher again today too. So many people hold some of these big mega cap tech names in their portfolios. We know we're going into earnings season. Let the winners ride, or does it feel like things are getting toppy here? What are you seeing?
Well, I just want to point out to our viewers, you look at the NASDAQ and it's on the verge of finally taking out the July high. But look at the S&P and look at the July high. So really a picture speaks 1,000 words that the leadership in the market isn't the same now as it was in July. And a lot of that's mega cap. Now, I think a lot of mega caps are going to make a run at new highs. But shorter term, I think that we're going to have a little bit of an October problem because I do think there's going to be retaliation by Israel before the elections. I know the administration would like to postpone that until after the election because of all the unknowns with that. But I also thought that one of the shortcomings that people talk about when it comes to Kamala Harris is her lack of experience on the world stage. So what if there was some type of retaliation where the U.S. actually did participate, and we're providing the weapons that Israel will use, and and it's successful. At least it looks like that for a while. I think it'll accelerate after the election, but it looks like there's a mission, and she was involved, and it worked out. That could be an October surprise. And I look at this market right now. I'm not looking for anything big, but I think before the end of the week, I have some turning points here. And for a pullback to 5,600, I think it's possible in the S&Ps. And, on the next run, NASDAQ should be able to take out that high and trade towards 23,000. So I don't think that we're going to get to 23,000 on this run. I'm just looking for maybe 5-10% correction on a geopolitical event like that. Really, the S&Ps, if you want to get long-term, that's something different that I think is set up for after the election or into 2025. And that's it. We'll be finally reaching the objectives off this breakout, goes all the way back. I've been on your show several times, even though I've tried counter trend trades. This one worked pretty good. That the count and the measured move was 6,100. And that's where I think we're going to go. That's where the return line is. But look at this weekly relative strength index. So although we're blowing off and melting up, momentum is diverging. What's key about it is diverging under 70. And most of my best setups happen when the RSI is under 70 for a turn. You could get pullbacks when momentum is strong up near 80, but the big declines happen when momentum is really weakening. And really, momentum peaked last spring, the spring of 24.
So it sounds like you're saying more short term. There's still room to run, but you're getting concerned when you move out beyond just a really short-term perspective.
Yeah, that's exactly what I'm saying. I think there's a trade first to the downside to 5,600, and then I think we're going to finish it off to 6,100, and I'd be looking for shorts at that point. And I do think that everything is really, how I feel about the dollar being the fulcrum of the wheel. And I think that part of what I'm seeing in the dollar, which is a change, I took a trip to Chicago, got back Monday. I was there for 10 days, but the week before the week I left on a Friday on TradeGateHub's YouTube channel, I came out, it was down here, and said that, Fed had already cut rates and I was getting all kinds of divergences and had a lot of company being bearish a dollar that I didn't have here. And I said, W.D. Gann, who was the greatest market timer in history, had a maxim. And this is how good of a market timer he was, Maggie. He's documented that he called not only the day, but the hour of a major low in the wheat market. So if a market timer like that, to that master level, has a maxim like, if you don't learn how to change your mind, you won't have any change left, is what I led off the broadcast with, saying I'm expecting at least a bear market rally to 102, 102.50. And, it's not just the
This
price.
is in DXY, correct?
This is in Dixie. And so it's not only the price, but it's how a market gets to a price. Okay. If it had given me some type of zigzag, say we rallied and then we pulled back and then we rallied again, but this got from point A to point B in a hurry. Okay. So to me, this was impulsive. And so it changed my count to where I'm now looking for 106 to be challenged in the Dixie. And I would use any dollar pullback to buy around 101.50, because my ultimate target before the bear market ensues, and I think that's, well after the election, is that we're going to test this downtrend line, which comes in right around 106 before this dollar rally is finished. So the only two things I think could drive it is either, I'm wrong about yields and they're headed sharply higher, or there's some kind of risk off event coming that's going to drive people into the dollar. And, 106, I think, is going to shake a lot of the markets up, including S&Ps, because the last time we were at 106, if I just go back to, just in time, where were the S&Ps the last time the dollar was at 106? They were, that was May of last year. So they were at 5,000, which is where I think after we peak at 6,100, where we're going to go. We'll take out this August low. So
for S&P.
Yeah, for S&P. And NASDAQ will be even worse. So we'll take out this low. But first, we're going to see 23,000, I think, in NASDAQ into after the election. And then I'd be raising cash. I'd be buying protection. The VIX has been staying pretty elevated here for a market making new highs. So that's
a great point. I mean,
yeah.
The VIX had been not such a great indicator to watch, but it is interesting because it hasn't fallen all the way back. So Dale, let me ask you, because you, of course, I'd be just being so great about giving time frame here. If someone is not a nimble trader and is not going to be able to follow on a daily basis, is your conviction enough that you would be thinking about getting defensive now, maybe raising cash now? I mean, it sounds like there's going to be another rally, but do you hang on? And how do you think about that for somebody who might be a little bit less risk tolerant?
Well, why don't they just do the formula? Is it worth another 5% from current levels, which is where 6,100 would be, to be in the market? Some of these events could happen overnight, and you get a gap, and then people just are like deer in the headlights, and they get paralyzed and they can't act. I've always felt that it's always better being a little early than late. In fact, if I'm on time, I feel late. So, I think it's always better to be a little early. I'm not saying that you go to 100% cash, but, there's nothing wrong with after a tremendous bull run. This is not a new bull market. It started in August of 1982. And I just have another thought that's related to the election. In fact, some great narratives come to me from the community of followers and people that follow my work. And someone proposed to me that, if you recall, Maggie, in 2016 on the election night, S&P, when Trump won, S&Ps were trading limit down till Carl Icahn left the party and went into his office and started buying hundreds and hundreds of contracts of S&Ps. So if we might be running full circle and Trump has a victory, that perhaps this melt up into a high, Trump put in a low in 2016, and this might end up being a Trump top, because people are going to be, at least on the financial side, excited about tax cuts and deregulation, and it's going to be viewed as bullish for a lot of asset classes. So something to consider, that maybe that's what the market's doing. Maybe it's starting to price in a Donald Trump victory. I think DJT, which is a stock, has come out of the hole here in the last a week or so, and maybe that's an indicator as well. Watch DJT. Maybe
I guess the question is then does it turn into a sell the news fact? Like if
it was a buy. It certainly was a buy the rumor fact in 2016. That was hundreds and hundreds of S&P handles ago. 2016. In fact, let's take a quick look at it. I'll just pull up a weekly, and we'll see where the S&Ps were, or even the NASDAQ was in 2016. So all I have to do is go to a monthly, and we'll pull it up. And what an advance that's happened since that time. So here's 2016. Here's November of 2016 out here
for the NASDAQ 100.
For the NASDAQ, okay, and here's the S&Ps, 2016 November, right here. That's November 1st. So we went from 1900 to in 8 years to 5,800. Pretty nice trade, right? You're talking about 250%. That's what we've had. And this was, a Trump low.
Yeah.
It was limit down that night. I woke up, it was unchanged the next day, and that was it. It was off to the races until COVID.
Paul pointing out that DJT up 18% today. Christopher has a question. Okay. Yeah.
Interesting.
Christopher has a question about TLT. And I know that's one of the charts that you're looking at. I mean, it's interesting that you point out the sort of risks to some of the trading time frame you're talking about is if we see yields go much higher or a risk off event. Yeah. Based on what we're talking about with risk off, there's plenty of things that could trigger that. But what about those yields? What are you looking for there?
Okay, well, we're right at very, very significant support here in the TLT. And we've actually pulled all the way back to the major breakout, which I remember being on the air with you a long time ago. In fact, this is a 4-hour chart, but if I go out to a daily, you'll see how significant this area is right here. Look at this line. So the horizontal line, where we've pulled all the way back to the breakout. So TLT has to dig in its heels in here, and I wouldn't give it much more than 90. If we start taking out 90, this is going to look like this was all of it. I still think that there's a chance that the bonds are a buying opportunity, and part of it might be, again, risk off. Okay, that maybe we get a rally with risk off, and they're good or bad from here. It's a little cleaner to me in the 10-year, because I remember being on or talking to Shri, one of your favorites, and saying 420 was a breakdown that measured 370. So we went to 370, then took it out. And this was actually the Fed half a point cut putting a bottom in yields. I thought we'd rally back to 4. Now we get back above 420. You know what? The interest rate bears, they're looking for 4.5 to 480 again. They're going to be right. So we're approaching a line in the sand for if yields are going to continue lower, we shouldn't have closes back over the 420 level in the 10-year. I hope
Yeah.
that helped them.
There is a question with a pondering face. One of my favorites. I often feel that I am doing that while I'm listening to all this great commentary. How can yields be going up when rates are coming down? I assume you mean Fed rates. Has that made it tricky to try to figure this out, Dale? Because you don't see you've seen a change.
No,
How
because the market's leading the way.
Yep.
Okay, it's not the Fed. It's the Fed lining up with what people who are voting with their pocketbooks, bond vigilantes, commercials, they're way ahead of the Fed. Okay, so then the market is questioning the Fed. There are people saying this is a policy error after the employment data and some of the inflation data, and that I don't expect the Fed to reverse course, but I don't know how the market will like it if they stay on hold because we're not getting any weak numbers. So again, the market's always mispricing with their dots. Don't trade off dots, trade off candlesticks and the instruments that money votes with their wallet. And that's a 10-year TLT. That's where you watch rates.
Absolutely. And that's a great explanation. It is that inflation fear. And it's really interesting to see this because we really haven't seen the bond market at odds with the Fed in a long time. And I'm always curious about that because it seems to me that's where the tension is between people who think that we're going back to zero rates because, they have no choice because they've got to pay the interest on the debt. And then people who just believe we're in a higher for longer, a different regime change. And it seems to me the point of difference between the two is how much the bond market listens to the Fed or the Fed can control the bond market and how much they lose control of the bond market. I just want to go back to...
Well, before we go, Maggie, I just want to, that viewer, pay attention to U.S. dollar yen. If you notice the 10-year yield chart and the U.S. dollar yen chart.
Why is that important?
They're correlated. Okay, so you could get an idea, like say, for example, I'm looking for a short in the yen, about 151 or so. And I'm not looking for new lows right away, but I'm looking for a trade. So when the yen starts pulling back, yields will start pulling back. Okay, and I think the yen has topped. I don't think we're going to see 62 again unless we close over 52. I would use this like the 420 level in the 10-year. So my bearish view on this, and maybe we go 54, is that this was a major high and that the yen will become a safe haven currency once again. And you're going to see when risk off happens that the yen's going to come off. Part of our break that we had in the summer was due to the unwind of the yen carry trade. Right. So its character has changed now to safe haven type currency.
Very interesting. I wanted to stay on the dollar and just go back. I think we might be touched on that, but I just want to make sure that Ian was asking, what do you expect in terms of the dollar after the election, the impact? What are you thinking for the Dixie leading up to the election? I think we talked about stock reaction with the election, but what do you expect for DXY?
Well, I'm expecting 106. Timing it with the election, I'd rather just time it with my charts. And the next trade, the big trade, is a buy in the dollar down here, buy a pullback. So let me break it down with the majors. So I think we're going to see bounces in these currencies in the majors. I'm a seller in euro 110.60, looking for 106 again. I'm a seller in cable at 132.5 for a potential right shoulder of a head and shoulders top. I'm a seller of Aussie back near the false breakdown between 68 and 68.20, looking for a pretty good break, maybe even test out the 64 level. Canada, I'm looking for over 140, but I'd buy a pullback at 6.5 and then looking for a move to 140 and then the top in Canada. I hate to, this is pretty contrarian and I could be proved wrong, but based upon what I see in the gold silver ratio, to me, it looks after this move. At first, I thought it had peaked, but now it looks to me like all this is consolidation. And this means I'm looking for over 90 and or higher in the gold silver ratio. And that means gold will outperform silver. So if that's a possibility and we're going to have a dollar rally, the gold can rally with a strong dollar. I've seen it before. But silver needs a weak dollar. Silver needs a bear market in the dollar. So if we're going to 106 eventually, silver has one more chance to make hay here. But to me, it looks like what we had from the tops up here at 33, which was a target of mine, that if we close back under 30, I could come up with a number that'll probably shock the market at $25 silver. I think 2,700. And here's my technical case. I know, and we could go to 38, 39. Because, I am looking for a 200-point pullback in the Dixie. So this is silver's chance to make hay. If it can't make new highs and follow through, the downside, I think, is possible because I'm looking at this on the weekly. And that'll really shake up the miners and there'll really be values. So say, for example, this was a wave A and we rallied to new highs, but it's not the start of a new wave. It's a continuation of a corrective wave, which would make this an irregular B. And we get 1.618 of this decline from here. It takes it to the weekly moving average down at 24. And
wow,
that's
beware. Beware,
I think
you're playing in silver.
Yeah, and I think that also has something to do with risk off, Maggie. When the market sells off, whenever that, the big sell-off happens after the election, I think gold and silver are going to sell off with them. I think everything will. Like we said, you get the dollar right, you get the markets right. And if we're going to 106 after this pullback, so all assets have a chance to rally. If I'm right about a pullback in the dollar to 101.5, which is my preferred scenario here, that we're going to pull back here, this should give the markets a chance to, this would still be a tailwind. But if I'm right, and this is a break to buy, and we're going to have something like this from a higher low, that's going to pressure everything.
Yeah, definitely some really important things. If you are levels and sort of warnings, I would say to keep an eye on. If you are listening to this on our podcast, Dale is sharing his screen and they're fantastic. And that's why he can be so specific about the level. So I encourage you, when you get in front of a computer, to go check it out on YouTube so you can see what he's talking about with some of these really important support levels and key areas that he's watching. We're also going to post it on Substack. We're there as well, and we will try to include as much as we can there. And the video link will be there too. So if it's easier for you to get to that location, you can do that as well. And of course, subscribe in both locations. So some great feedback in the chat. Paul, this guy is a master. We agree. Eccentric, this guy's a legend. I think we know he is, but thank you for that. And Ralph asking,
in my own mind.
In your own mind, in our minds, for sure. Are you kidding me? And Jay saying, thanks, Dale. Love the currency quick fire round. And it's really important because as Dale just said, the dollar is so important, and a lot of people don't talk about it. And we don't always get someone who has such deep understanding to be able to share that. It's really important to watch that foreign exchange market. So Ralph asking, do you have any thoughts on copper or any of the agricultural commodities?
Last time I was here, I like the grains. They're going to be tested quite a bit. Copper is going to approach a pretty key area here. I think eventually it's going to have problems when the market has problems from 6,000. But right now, 420 looks to be real critical. If it starts getting through 420, maybe we see something like this. And while everyone's worried about inflation and the Chinese are throwing the kitchen sink at the economy, this could be viewed as a failing rally. So I'd stay away from all metals at least into mid-November and see what things look like after the election.
And if you have a high tolerance, I know some people are looking at those lower levels you talked about and saying, "Oh, that I would be interested in buying it there." Ivor, at the very beginning, when we were having some of our tech issues, said, "What are your thoughts on Bitcoin?" I did not forget about that question, even though it was one of the first ones posted. And I know you were looking at Bitcoin right before you came on air, Dale.
As part of the melt-up scenario, part of the everything bubble, and we're on the verge of a major breakout. I've been watching this sideways formation for a while. Look, we get a breakout over 68, and HODL people will be doing cartwheels because this measures, 125,000. If you take it from 15 to 75, that's 60. You tack 60 onto this breakout, and it measures, 125.
Wow. That seems like that's quite a distance to travel.
And we'll see. I want to see where it's at when the S&Ps are 6,100. It's part of it, and there'll be a time to, dare I say it, even sell your Bitcoin up there and see what happens if we have a bust when everything that has been propped up for at least the last 6 months or a year. I'd take it back to the SVB bailout of the regionals. Everything's being held together, and maybe reality hits next year in 2025. It could be the first year of a lost decade, as a lot of people are talking about.
Wow, so you sound really concerned once we start to push into the new year.
Yeah, I am. I'm concerned about a lot of things right now, Maggie, that at times makes trading look insignificant. Okay, so, but, this is our hand we're dealt.
Right.
So I'm a trader, and I'm going to do my best to help people not step on landmines, and also seek out some opportunities and keep people on the right side of things.
Yeah.
Because it's going to be, let's face it, my generation, we haven't been tested. Here we go. I mean, our previous generation, we've had it great, lived in the sweet spot, during the most prosperous time of any country in the history of the world. And we have some bills to pay. And we have a divided country. And there's a lot of things out there that make it more important than ever to hold your friends and family close and have a community, people to cooperate with, not just in the markets, but in your lives. Find a community now, everybody.
Yeah, that's such important advice, Dale. Something we talk about a lot, and everyone's going to need it to lean on, because there is a sense that there are going to be some really tough trade-offs and decisions that have to be made, and serious conversations that we should be having, but we are not in the public discourse. I just want to give everyone a heads up. I had an amazing conversation with Doomberg today. We will be I will be releasing that on Wednesday. I'm going to be tied up in an event live, which is also super exciting. And I hope I can bring some intel back about that. But it was incredible. And he talks a lot about some of the trade-offs that we're not talking about. If any of you follow his Substack, you know that he does that. We talked a lot about things in the energy complex. He's got some really, really interesting takes. He's not afraid to be contrarian.
Yeah.
But he echoed a lot of what Dale just said. And maybe let's end on that, because the one thing we didn't talk about, Dale, was nat gas. And you were looking at that as well.
Yeah, I was lucky on that big down day we had in August. I look, when you have big red days, look for what's green. Okay. And when you have big green days, look for what's red, and it will give you a pretty good tell on what's going to happen. So let me just show this natural gas, because I think that we're on the same page, Doomberg and I, on this. So last time I was on, I marked the day I was on. This is a weekly chart. It was in here. This was a week that S&Ps were getting slammed. I was bearish S&Ps there. I was wrong. I had to get out of my SQQQs. I got out under 850. So just to show you that I can be wrong, but I've learned how to be wrong. So once we took out this 850 level here, I was on the air here. I thought I had something. I got out of the way. And what would have happened if I didn't get out of the way? Especially in options, guys. You might get a price recovery, but look at all the time that's already bled away, and the options decay like a bad tooth. So here's the natural gas. If we ever get back over 3, and I'd be buying this break maybe around 220 or so, but look at the monthly and we'll wrap it there. And I think we will get over 3. That's the monthly. Let's go back to the weekly. Look at where it could go. Okay, and my rationale was different. My rationale is supply issues because of the Middle East, not to fuel AI. But look what happens if we get over 3.
Wow, yeah.
Then you got 4.
That's
and
incredible.
You get over 4, you know.
So yeah, and then we're looking at peaks back in July, you know, over 9, you know, so this is a far way to travel.
This was Ukraine.
Yep.
And you know what? Europe had a very warm winter last year. Remember they were going to starve.
Yeah, that's what we talked about.
Death.
It seems like a distant, you know, memory. No one even brings that up, but it's, you know.
Yeah. Well, you know, we'll see what happens this winter. Anyway,
fantastic stuff.
It was great to have a conversation with you.
It's a heavy time. It's a heavy time. So we all have to try to do our best and look for the opportunities where we can find them. But it's always wonderful to catch up with you, Dale. We appreciate it.
Too,
Dale just went back to his hometown, Chicago, had some awesome eats.
Yeah, it did. Yeah, great pizza, great Italian beefs.
Did you serenade your friends, Dale? Did they get a song from you?
I did, actually. I did a little Elvis for my friend's wife.
A little Elvis for your...
Yeah. So, you know, the king left the city. But you know what song I listened to? It's called Illinois by Dan Fogelberg. And the line is, I might miss the harvest, but I won't miss the feast. Illinois, I'm your boy. So I went back. It was great.
That's great. That's great. Well, we're back. We're glad that you're back in the seat with us, Dale. We're going to need your expertise and guidance as we navigate this really volatile time. So we appreciate you always.
Always a joy being on with you. Thanks for having me, Maggie.
Awesome. Great stuff. And thanks to all of you in the chat. I will see you again live on Friday, but Wednesday, you can all roll up and get in the chat because we're going to run Doomberg as live on Wednesdays. So be sure to tune in for that, and you can
I'll be watching.
Talk to each other. Yeah, talk to each other in the chat. Let me know what you think. He is, as I said, not afraid to lay it down, and he gave me a lot of things to think about. So I hope you enjoy it, and we'll talk then. Have a great week, everyone. As always, take care and good luck out there.